If you can hear me, you can hear me. Okay, so we just heard a question about tokenization, and indeed the person who asked it is now going to join me on this panel to talk about tokenization and other aspects of decentralized finance and how they can complement the current financial system and bring innovation and new opportunities both globally and in the region. So in order to discuss this with me, I would love to invite my panelists, Christina Zhang, who is the Chief Executive of the Metaverse Institute, Sagar Sarbhai, who's the Global Head of Business Solutions and Advisory at Fireblocks, Mustafa Syed from PwC, and Lola from ATME. I think we're almost ready here with the chairs.
Okay. So just
lovely. So, Christina, you actually sort of got us started preemptively with your question. But I would like to start with you because I think a lot of the people in the audience may not be exactly familiar with what tokenization is. You know, there'll probably be quite a few representatives of traditional finance. So could you just give us a short primer on what we mean by tokenization or what we will mean by tokenization in the context of today's discussion?
Thank you. So tokenization means we create a digital representation of a real-world asset on blockchain. It can be any kind of traditional financing, you know, equities like debt, bonds, stock market, etc. And also it can be literally anything from real estate, arts, airplanes, you name it. And the whole idea actually was coined by a gentleman in 2012, looking at developing a whole new measures to support transparency, accountabilities for different processes. So that's a very short introduction.
Can we take a step back even further a little bit, and can you tell us, or some of the people in the audience who might not be as familiar as some others about what the blockchain is? Because I think that's the sort of a fundamental underlying technology for tokenization.
Yeah, blockchain is basically we use digital ledgers to create like information, which all of them will stock in different ledgers, and we put them on the chain. Either it's public or private. And any information, once they store there, it can't be changed, which creates accountability, transparency. And I think that's the beauty of blockchain. And I'm sure my panelists will have lots of interesting things to add about the beauty of blockchain.
Sure. So, Mustafa, I'd like to come to you. Maybe you could sort of break down for us, as consultants are wont to do, in a few neat categories, the ways in which tokenization, the sort of tokenization that we are seeing in the world, and give us some examples of each of the categories.
Thank you, Jan. So, yeah, Christina somewhat alluded to these categories, but at PwC, we do work with a host of different companies across the globe, across industries, and we tend to structure tokenization into a number of different areas. So, the biggest area of growth, you could argue, in the last 5-6 years has been the interest in payments and currencies, right? We've seen governments and regulators around the world dabble on, digital currencies from a central banking perspective. We've seen a number of POCs that look at tokenization of deposits. We've also seen closer to home in the Middle East, UAE specifically, with the recent payment tokens regulation, private forms of tokens, stablecoins, being regulated in terms of frameworks. So that would be one primary category that has, I suppose, fueled the growth of tokenization. The other areas that Christine alluded to, you could break down in terms of fungible and non-fungible. So the fungible stuff would be the stuff that you see day to day, so we give it a financial services or banking aspect, fund arrangements, loans and private equity example. They could be examples, but then on the non-fungible side, you have aspects like art, collectibles, gaming, tokens and so forth. And then beyond that, which is even more interesting, and I suppose poignant for this conversation is the decentralized financial applications that have grown since the crypto asset cycle of 2020 and 21. That's become a very interesting discussion point for banking institutions and regulators because there is some interest in terms of can decentralized applications and decentralized finance be accommodated and incorporated in the institutional world? And I would argue these are the more prominent categories beyond just pure real-world asset tokenization.
Can I add on to that? So I think for any new technology, the adoption happens in waves. So I would like to tell you a story. Christina, you talked about the advent of blockchain and digital assets. The whole thing goes back to that one white paper that was written by an anonymous person.
I was the first person at The Economist ever to write about the blockchain when I wrote about that paper back in 2011 or 2012.
Yeah.
I've had an interest in this subject for a very long time. Unfortunately, I did not buy any Bitcoin at the time.
Yeah, so the story starts from there, right? That's the origin story of what we're talking about today. I remember I was in New York and there was this Occupy Wall Street movement going on and Bitcoin was suddenly the buzz of the town. For a long time, in fact, until today, the single biggest use case of blockchain technology has been speculative trading of crypto assets. But I think after 4 or 5 years since that paper was written, bankers especially realized that, hang on a second, this is actually a very interesting concept. This is not just about a get-rich-quick scheme. The underlying technology, which is blockchain or DLT, is actually very, very fascinating. And it was actually in 2016 when this concept of tokenization actually, I was with a German bank, and we were actually the first bank on the planet to actually issue a corporate bond on blockchain for Africa. The story really started from there. Now, critics of blockchain and crypto will always argue that blockchain is a hammer looking for a nail. And as someone who has spent 9 years in the industry, I would partly agree with that. But I think now is the time when we're actually seeing that inflection point or the hockey stick really take off. To add to what Mustafa, you said, what we are seeing, we have the luxury of working with big players across industry segments. I'll restrict my comments to financial services. What we are seeing now is the first really mass adoption of tokenization happening on the tokenized money space, whether it's tokenized deposits, stable coins, or central bank issued digital currency. And that really will power the entire ecosystem and the adoption of tokenized assets. The other low-hanging fruit from financial service perspective would be the inefficient assets, like, for example, fixed income products where issuance and servicing is error-prone, is very, very manually intensive. So if you're a bank, it does make sense to issue a corporate bond or fixed income products on-chain. We're also seeing early signs, and Alex, we were talking about it off stage. We are also seeing early signs of tokenization of commodities, and I think you will be able to dive deep into that. And then now, more recently, I'm sure people here would have heard about BlackRock's Biddle Fund. For people who are not aware, that's essentially a tokenized money market fund issued by BlackRock, the giant asset manager. And that really took the industry by storm, and that has triggered a lot of innovation in that space, of tokenization of money market funds. In the future, we are already seeing early signs of tokenization of unlisted equities, illiquid assets like infrastructure projects, real estate projects, especially in GCC. We are talking to a lot of sovereign wealth funds who are very interested in tokenizing real world assets or shipping farms and solar farms and so on. So I think there's a very interesting story, but we are now at that inflection point where we are already seeing mass adoption of specific assets being tokenized on blockchain. That's
really interesting. Alex, I'd like to come to you, and maybe because you as Sagar mentioned, you're already you have use cases in the real world or linked to real world assets. So could you tell us a little bit about those?
Yeah. Maybe first let me introduce ATME, because I think it's quite important, because ATME is Bahrain-based company. Is owned by Bahraini shareholders, so it's local. So basically, now we are talking about not about tokenization from somewhere in the world. No, now it's here. We are licensed by the Central Bank of Bahrain, and just yesterday we had a chance to hold a press conference right next to this room for local media to announce to the market that we are live now, and everyone is welcome to have real tokenization cases here locally in Bahrain. But speaking about use cases, so for now we have a couple prospects. So we have a company who's willing to tokenize metals, precious metals, gold, platinum, palladium, but also base metals, copper, nickel, cobalt. And I would say if for precious metals, there are many ways you could get exposure with traditional banks, but copper, nickel, I doubt you can go and easily find exposure to physical metal. So each token represents a title rights on the metal which is backed, I mean, as an asset. So it's a great opportunity for pretty much everyone to have access to such products, not just big institutionals. And another interesting use case we have, it's cargo or aircraft. So basically, we're approached by a company who's aircraft leasing business. So they're looking for a way to tokenize aircraft. Again, you would say, but yeah, how it's different to securitization of a plane, which has been on the market for like decades, I think. And the difference, there are two benefits which tokenization brings versus securitization. Number one is entry ticket. I mean, securitization is usually, I mean, with the plane, it's very high entry ticket, available only for very high net worth people, while with tokens, you can enter with like $1,000. So pretty much we're talking about like thousands of people who could own the title on the plane and have right on all the dividends coming from this plane being leased. So this is point number one. And number two, so basically in this case, token is like an equity product. Number two is secondary market. You know that any equity investment, any private equity fund, you invest and you wait for how long? 7, 8, 9, 10, sometimes even longer years, with a very limited possibility to quit your investment. And again, with tokens, you can quit in 3 months, 6 months, pretty much any time. So it gives you possibility to easily quit the investment. So these are two really big advantages versus traditional structuring.
That's interesting. I mean, as you said, you know, some of these, sort of the idea of detaching a physical product, be it a bond or a share certificate or some copper or an aircraft, from the physical object to a security is not new. And there have been other innovations in this area, specifically for commodities. You know, you can now go and buy an ETF, right, an exchange-traded fund. So what would you say is an advantage of a tokenized, you know, buying copper through a tokenized system versus buying a copper ETF?
It's important that in ETF, you do not own the title on the metal. So you take the risk on counterparty, pretty much on whoever issued this security, while token is a representation of title right. It's linked, if we're speaking about, let's say, a precious metal, it's linked to concrete bar with a number, 250617. This is your bar. If we're speaking about nickel, which is usually structured as a palette of nickel, so it also has ID number. This palette is yours, while in ETF, yes, you make, so it's a derivative product with the risks associated with that.
Right.
And the cost, of course, because in ETF, you pay management fee, while with token, there is no management fee, so it's more cost effective. This is not a very good benefit. Okay,
that is interesting. Now, I would like to maybe turn to Mustafa to give us a sort of sense of, you know, right now, today, where is tokenization in finance, where has it achieved the greatest scale? So which area of the ones that we've touched on briefly is the one where it has actually advanced the furthest at the moment?
That's a good question. And I know, Jan, you and I were talking about this just before we came on stage. Look, I think there's tremendous value in tokenizing all forms of real assets, right? I love the ideas that you mentioned, Alex, about, you know, precious metals and commodities. But when we take it back to financial technology, fintech, finance, anything potentially which is formed under a traditional contract can be tokenized. But just because it can be tokenized doesn't mean it should. So to your question, where do we see growth? I'll go back to my previous response. If we look at maybe the growth of digital currency, so I'm not talking about crypto here, I'm talking about other forms of regulated currencies, that has been kind of the most killer use case for tokenizing in the last 6-7 years. I'm not saying that real assets can't be tokenized, but I think that's been the biggest area of growth. If I take it into this particular region.
You mean like central bank digital currencies?
Yeah, exactly. I mean, I've focused most of my time in the last 7 years in this region. We've seen tremendous growth thinking and regulatory advisory on this particular topic, right? So there are a number of central banks that are very close to coming up with news where they might be introducing some form of digital currencies. We've seen institutions in this region, central banks regulate forms of privatized tokens, when it comes to payment tokens, the UAE specifically as an example. And we've seen, open, friendly, regulations such as in Qatar and in Bahrain that are trying to encourage these types of forms of, I suppose, payment-related tokens. So I guess what I'm trying to say is that has been one of the key areas of growth. I mean, if you just look at the privatized stablecoin market, we're close to around 140 to 160 billion dollars. So it's tremendous growth. But you and I discussed earlier on that when we review the newspaper or go online every day, you see a number of think tanks always talking about the potential market cap value of real asset tokenization. Some say it could be as little as 1 to 2 trillion. Others can say it's 30 to 35. As PwC, we've done our own thinking around this, and we are somewhat more conservative with our estimates, but we do think that we are in the middle of this kind of tokenization journey or cycle, and we think there's tremendous opportunity, but we do need close regulatory oversight. There are massive risks associated to it, and if we look at financial institutions, banks, regulators, they're not just going to allow financial institutions to tokenize anything without necessary regulatory safeguards. Yeah.
Thank you. Yeah, please, Christina.
Another thing I want to highlight is I co-chair task group at the United Nations through International Telecommunication Union on identify frontier technology to help government worldwide to build people-centered smart city. And one of the major challenge is how do we find enough financial resources to help local governments who might not always be in the best position to create major physical and digital infrastructure required to be smart. And one of the solutions we're looking at is tokenization of national or local government debts. And if we're looking at the current global statistics, according to IMF, the global GDP currently stands as 105 trillion US dollars. And the global debt as a result of the pandemic is 97 trillion US dollars. So worldwide, we are 92% in debt. We only have 8% liquidity. But there is a lot of interesting experiments taking place, especially in Africa, for example, in Ghana, Nigeria, and Kenya, where the government has been working with private providers to tokenize national bonds so that it will be much easier and faster to attract investors with real-world assets, say a gold mine or other kind of natural resources mine as backup. And then the investor actually invests in the bonds with almost like a very good return for investments. So I think that can be a very interesting thing to look forward to in the years ahead.
But how is the tokenized version of this different to just having a sort of either a public-private partnership, which is also like an old mechanism for doing something similar, or how is it different from just having a collateral-backed specific, a project finance bond? So how is tokenization making it more attractive to investors relative to those sort of older methods of raising money for specific projects?
I think we all know that in Africa, for example, the leadership change of different countries will have a very major impact on how business is operated. So for example, if you invest in like a government bond in one of the countries and they have a leadership change in 5 years, where the bond is 10 years. So not all investors will have 100% confidence and say what's going to happen after that 5 years, will the new elected, the new government official still honor the commitments, or will there be any financial risk? But if you have everything tokenized, and then the smart contract will still be there, and it will be much easier for the new government to still honor that. So I think that's the beauty. It gives a lot of more trust.
So I actually have a slightly different view on that. I think there are more low-hanging benefits for tokenization. Without getting into government macro geopolitics, I'm not an expert on that. But I think from a technical perspective, I'll give you 2 examples. Let's talk about government bonds and corporate bonds. Right now, on the issuance of these bonds or asset servicing of these bonds, the processes are very manually intensive and often prone to many errors. So from an issuer's perspective, whether it's a government or a corporate or a bank, it makes it very easy to issue and service the bond. You can also embed a lot of logic in the smart contract and automate your compliance, automate governance, automate audits, and so on. You could potentially also automate the dividend payouts, right? So the smart contract will dictate when you service the bond and when you pay out the dividends, and everything happens automatically. So that's a cost efficiency play. Now, there are certain asset classes where there is a revenue case to be made. The case in point, again, is money market funds or tri-party repo arrangements. Now, because it is being done on-chain, this could be the typical settlement cycle today is T+2. But on blockchain, this could happen instantly. Now, in a high interest rate regime, every hour, every minute matters. So imagine the amount of capital efficiencies an issuer or an investor can gain by bringing down settlement from T+2 to real time. This is specifically very interesting for companies and investors in the case of money market funds and repos. So I think it depends on the asset class that you're putting on chain. I'll give you one more example. KKR, about 2 years ago, the largest private equity company on the planet, issued part of their pharma fund on-chain. Now, the story for a long time has been that tokenization can lead to fractionalization, you could democratize financial services, but that's actually a very long-term play. KKR did it to gain cost efficiencies and essentially bypass the intermediaries which were involved in that process. So that would be my take on this.
Alex, yeah?
Yeah, I'll give you a real-life example from my past experience. It was a large mining company, head of treasury. You need to manage liquidity for big production. So what are your instruments? So you issue a bond, traditional bond. The fixed costs are very high. Lawyers, a lot of intermediaries. So basically, this leads to a situation that bond is issued for 3, 4, 5 years, like $200 million with this rate. But in fact, this creates inefficiency because as a head of treasury of this particular mining company, he was looking for money just for 6 months. So what they did is they issued tokens. It was not tokenized bond. There is no actually need to tokenize bonds. You issue a token, which is a bond. It's that token. So the cost is very low. You issue a debt product just for 6 months to finance your needs. So with this, and you see, it's good that tokenization in this case, it's not like killing the traditional financial products. No, they complement each other. These guys are still doing long-term financing with traditional bonds and issuing tokens for short-term financing. And what's good for investors, you also get 2 different products. You get a good, high-quality product with a short tenor. So this is a good example. But this is for large corporates. But let's speak about mid-sized business. These guys do not have an option to issue a bond. It's just too expensive for them. So imagine you have, Bahraini business, 5 hotels, you want to build the 6th one. What are your options? You go for project financing to the bank, option number 1. Option number 2, you go and sell part of your business, but again, maybe 2, 3 investors. Or now it's in your way, like you can issue a token and raise capital from the public, pretty much, from corporate investors as well. Yeah, you still need to convince the investors, but in this case, you do not convince risk department of the bank. You convince the people to believe. And maybe they believe in your project, not because of some formulas. They stayed in this other 4 hotels with their families. They enjoy it. They believe the 5th one is going to pay out. So and for this mid-size, it's a new opportunity to raise capital.
So I suppose the interesting tension here is that, historically, most of financial services have been intermediated through these sort of centralizing institutions, right? And they derive their power, including their market power, from being the center, at the center. right? So the big banks, brokers, other asset managers and so on. So people are used to conducting their financial transactions through them. And they don't really have a huge interest in doing this. I mean, maybe there might be some efficiency changes, but then if that catches on, for them the fear is that they'll be out of business because they will no longer be needed. So there is a sort of like a first mover sort of problem, right? You need to get enough scale to make this visible and attractive to a lot of people. But in order to do that, you sort of need to bypass the traditional financial institutions, which are the gatekeepers to the financial center. Sagar, I wonder how, Fireblocks is quite an established company now. So how do you think about that tension, and how do you sort of interact with the traditional financial world? Is it more competition, or is it cooperation? How do you see that? Obviously, Larry Fink earlier this year, the boss of BlackRock, said that tokenization is the next step in finance, and he talked about great opportunities. But so far, these traditional institutions have been playing around with it, but only really on the margin, almost like these little pilot projects, rather than really sort of going all in on the technology. So how do you see the interaction between traditional finance and tokenized finance?
So you're absolutely right that there have been POCs, there have been various sandboxes, including one in Bahrain, the central bank, and there have been experimentations done. But again, this is such a critical piece of the world. You cannot a regulator will never allow a bank or any regulated entity to do something, go mainstream without POCs. That said, as I said earlier, we are now seeing early signs, BlackRock is a great example, of actually things going mainstream. It will still take a few years before everything goes mainstream, but to your earlier point on potentially banks getting disrupted, now I worked in the banking sector for 10 years before moving into crypto and I've been here in the industry for about 8 years. I have a more balanced view on things. I personally don't think, now the narrative was, even when the Bitcoin block paper came into being, the narrative was down with the banks, down with central banks, Bitcoin will become the global.
You weren't out on Occupy Wall Street back in 2012.
Yeah, so that has clearly not happened, and I don't see a world where banks will get disrupted, frankly. I think there is a case to be made for collaboration, where banks leveraging technology and then maybe passing on the benefits to the customers. As a case in point, you could potentially leverage tokenization and lower the ticket size to get into more exotic instruments like PE and so on. Other thing, we talked about cross-border payments. Historically, there has been a dependency of SWIFT, a monopoly of SWIFT, and then correspondent banking network for a variety of reasons. Potentially with tokenized money, banks who have been gatekeepers, is the word you use, could still use that and reduce the number of days it takes to send money from Bahrain to Philippines, and also reduce the cost that it takes. So I think there's a case to be made here, and I still believe that banks will remain to be the gatekeepers. They may get disrupted in some shape or form, but they're not going anywhere, and then there's a reason why they exist, right? Because there's trust. Trust is the most important thing in financial services, and I don't see that going away anywhere.
Christina? If I may, Jan, go ahead.
Christina, please.
Yeah, I just want to follow on. Actually, in April this year, the Bank for International Settlements has came out with an initiative in collaboration with 7 central banks in Mexico, Japan, South Korea, New York, etc., to looking at how to create a new system to integrate the tokenized commercial banks' deposits with the tokenized central bank deposits on a programmable platform, which BIS is championing now. So I think the traditional banking sector is definitely realized the importance of tokenization, and they want to play a leading role in that. So I think in the future, there will be a very interesting integration period between the private sector and public sector moving forward to support financial inclusions.
By the way,
around the world.
We were involved in that project. It's called Project Mariana, and we actually built the liquidity pool for the CBDC. So thanks for.
Mustafa, you wanted to chip in as well?
Yeah, so I mean, just before I touch upon what Sagar was saying. I agree with Christina's point. This whole notion of a multi-ledger bridge or a unified ledger that connects different jurisdictions based on new kind of tokenized form of money is definitely the future. We're not going to see different countries develop their own, whilst if we look at historically, some of the more central bank digital currencies that have gone live, and there's probably 3 that we can cite, those particular countries did go down their own avenue, and to a large degree, most of them haven't been successful. So the initiatives conducted by BIS, even the kind of advisory work the IMF is doing on this, it is all pointing towards this whole kind of unified ledger concept. So Christina is very much right. I wanted to address your previous question to Sagar on the whole point around the challenges of changing that mindset. You just have to look at what's happened globally in the last 5 years. Like, you know, I suppose interest rates becoming a critical issue. You look at banks around the world driven hard to cost cut, to drive margins. These are very topical issues when we, PwC, speak to our clients. And so there's very little that our clients can do right now when it comes to traditional forms of assets. And so when they examine and explore tokenization, and if I cite all of the examples that my peers on this stage have discussed, it is a genuine new avenue for them to explore a paradigm shift in the way that they can design and create new products in a tokenized form. Because it's, at the end of the day, all about making money. And this is ultimately one of the key drivers for them.
Thank you very much. Unfortunately, we've run out of time, but we will let you have a few minutes left of the refreshment break. Thank you so much to the panelists for a very interesting discussion, very thought-provoking, very futuristic, but also clearly with examples that are already entering into the real world today. Thank you so much.